Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, August 15th, 2011 is sponsored by Realtik. Alright, guys, let's get started here today. Markets, for a change, are very, very quiet. There is a rally on Wall Street of decent proportion, but in comparison to the wild trading of last week, it is actually small. Dow Jones Industrial Average up 144 points, Nasdaq up 25, and the S&P 500 up 17. Basically 1%, 1.25% across the board. Now, the reason why I say in comparison to last week it's not that big is because last week 4 of the 5 days had at least a 400-point up or down move in the Dow Jones Industrial Average. So today being up 144 is really nothing to write home about. The other thing of note today, you have to look at the volume. Look at the volume here, folks. Today it is dead volume. It almost reminds me of holiday type trading today. I think people from last week were so exhausted, and if I zoom out you can see the volume change. Look at the size of this volume, and then you can barely see the candles on the chart today. That's telling you that a lot of people are taking today off or sitting on the sidelines and just enjoying right now, having a little peace and quiet in this market. It is an insane market right now over the last 2 weeks or so, and again, traders are enjoying the peace and quiet. So again, folks, markets are hovering slightly to the upside. Markets again trading ahead of this Angela Merkel and Sarkozy meeting tomorrow. That's the German Chancellor and the President in France will be meeting to discuss key things for the Eurozone. The markets are hoping some positive things come out of that in terms of maybe some bailout type news or some sort of positive structure for how the Euro and the European Union is going to get through this mess that they're in right now. Because, by the way, folks, I said this last week, I'll say it again. The European situation is exactly what the U.S. went through in 2008. So how do you fix it? Are you going to do a TARP type program? Are you going to, do more? Are you going to do less? Are you going to have new regulations? These are all things that may be discussed in the coming days. Having said that, folks, we nailed it. And I'm going to talk about the trades that we nailed. The trading last week was unbelievably volatile. But you know what? The bottom we nailed right here. We said this was the bottom, and it turned out to be a beautiful bottom. Look at the markets. This was 110 on the SPY, which mirrors the S&P 500, and look at the move up since then. You're back to 120. That's a 10-point move off our pivot low. Now, how did we know that was a bottom? Because the volume signaled it. You had a bottoming tail right there. You had a 700-point reversal on the Dow Jones Industrial Average. The next day, all the pundits on TV, all the analysts were jumping off ship because the Dow was down another 500 points. The amateurs were as well following the people on TV and jumping ship. We kept on saying, guys, the bottom's still in. You know why? Because this pivot low never was taken out. Whenever you have a bottom in a market in a reversal like this, the only way you negate that bottom is if you come down and take it out. And you never did that, and therefore the markets again had made a bottom regardless of being down 500 on Wednesday of last week, and look at the results that followed. If you read the charts right, you will make millions, folks. Absolutely millions. Markets again moved up beautifully here, trading up nicely today. And again, at this point, it's kind of like a pause-ish type session here this afternoon. Very, very quiet volume. Everyone is looking forward towards that a Merkel-Sarkozy meeting, France and German meeting tomorrow, and we'll get some news out of that, I'm sure, from some comments, see what comes out of that. If it's very, very good news, markets should continue to rally up. But again, believe it or not, it's a 10-point reversal off of last Wednesday, actually last Tuesday's low, which is actually getting a little short-term extended. I still think there's a little bit more upside overall going into the holiday of Labor Day at the beginning of September. But again, a lot of the easy gains are in now. You probably have another couple hundred points up. My guess is the spiders could get back to the 124 to 126 area. That would be another 5 to 6 points upside in this SPY movement, or about 50 points on the S&P 500. But after that, that would be the extent, in my opinion, of the easy money to the upside. All right, so again, just keep an eye on it. It's going to be a very interesting scenario here. Let's take a look at the chart on the daily here, and this is a beautiful chart, folks. I mean, we nailed these bottoms so beautifully on the market. This was our master level right here. We said if the market closes below this blue line, you would actually go all the way down here. You can see very clearly it pierced it, never closed below, and look at the results. If we zoom in, the markets continue to rebound. You can see you actually filled a major gap today right here, which tells us there's also a little bit of resistance right here where the market's currently trading, right around the 120 even number. That was a major level I gave out in the research center to many research center players who ever watched the video videos. We talked about that level, the hot charts and alerts. I put it on that as well, and that's all included in the Research Center. And by the way, folks, you can get a free trial, 7-day free trial to the Research Center by coming to inthemoneystocks.com. There's also a 7-day free trial to the intraday stock chat. Everything's included in the Research Center that's underneath the Research Center, and the chat room stands alone. And again, you can come in the chat room, view our live charts, hear our live trading calls, ask questions live, all that fun stuff as well. All right. So again, look at the volume here on the daily chart. You can clearly see, look at how it's dying off. That's telling you the markets are bouncing back. I still think there's more upside. Very possibly the upside would be the extent of right up in this range. Most likely this is where the market will head. But remember, it's not going to be straight up. The markets will have flushes of 300 points here and there. It's not going to be straight up at all, so don't expect it to be. Too many amateurs think the markets just go in one direction. They think it goes straight up or it goes straight down. Nothing of the sort. It goes up, down, up, down, up, down, and eventually makes its way up overall or down overall. All right. All right, what else do we have here? Let's take a look at a couple other charts. Let's see what the dollar is doing today. The dollar is getting smoked today, and as you can see, I have some lines on the charts. One thing of interest here, folks, on the dollar, I kept on talking to the Research Center members, and again, if you're in there, you hear me in the live videos or the videos every night. I did a no-hype live broadcast last night where I took live questions and went over live analysis. The dollar continues to have a bearish flag pattern intact, and that's exactly why the dollar's down today. Take a look at this, folks. Here's a down move. Here's choppy sideways consolidation. It's a beautiful consolidation pattern that's telling you it's a bearish flag pattern, and the dollar is down today very significantly. Interestingly enough, the dollar's into support right here. All right, so nice little pullback there. GLD is trading up nicely here. It's actually gotten a big bid in recent last 20 minutes or 30 minutes to last hour. Take a look at this move up on gold today. Gold is rebounding. I actually like the short on gold if it gets a little bit higher. Somewhere around the 173 level, I'd start to get somewhat interested in shorting gold, but not until then. Last week, I talked about a pivot high on gold being in around the 175 level. That turned out to be an excellent call. I'm still holding some of my long positions out there just to touch base on them. Hewlett-Packard still long on this one, up beautifully, nicely on this play as well, well over $1 there. AK Steel, I'm still long in that. That's up 21 cents now on the day, continuing to advance. I'm in well up, almost getting close to about 40 to 50 cents in the money there as well. And then ultimately, the other position is Juniper. Juniper's trading slightly higher today as well, and I'm in the money with a break-even stop there as well. And again, folks, notice how all these plays on the long side I bought last week in the catastrophic market, craziness. But ultimately, it was the right decision. Why? Because I trusted the technicals and ignored emotion. The average trader, even the average analyst on TV, and all these talking heads on TV, they get caught up in the emotion of the trade. That's how you lose. If you can eliminate emotion, you will always make the right decision in trading and make money for life. It's that simple, folks. It really is. Honestly, it is. And again, my buy level here on Juniper was down in this range down here, trading up beautifully. Love to see this market continuing to advance slowly. Again, if I get a little bit more out of some of these longs, I'll take half off the table. I have break-even stops on a majority of them already. All right. Let's see what else we have moving here today. IBM is having a very strong day, up $3.87. Although you can see from the first candle, it's all been sideways action, although it is upticking now a little bit. MasterCard's having a decent day, up $2.50, but well off the highs. Look at that pullback off the highs here on MasterCard. Apple is having a good day, but Google and Baidu and Amazon all down. Google's down because it bought out Motorola Mobility here. MMI is the symbol there for $40 a share. You can see how it's trading just sideways. That means it's a buyout. Whenever you see a chart like that, it just means it got bought out for that price. So it's not going to really have much fluctuating movement up or down. But bottom line is that's why Google's down, because obviously they're paying a fair amount of a premium on the Motorola Mobility to get that under their control. Other than that, folks, the one thing I would say is that J.P. Morgan, Goldman Sachs, Bank of America, Wells Fargo, all having good days. These are really the leaders in the market today. Take a look at Bank of America. Bank of America got punished the last couple weeks. It is back on top today. Nice move up of 54 cents. That's actually a gain of 7.5%, which is a very solid move today on Bank of America. If we take a look at the daily chart, you can really see how much of a drop it had. My guess is Bank of America is going to head back here on the charts to gap fill. Gap fill will be first major resistance, and that's probably going to hit later this week is my guess on BAC. All right, and that price I have at around $8, excuse me, that's $8.15 to 20 cents. So $8.15 to 20 cents. All right. Let me see what else we have here. Other than that, I'm just scanning through some small caps in action. I gave this small cap as a swing trade in the chat room to traders last Friday. I gave it to them around $1.55. I said this is my next favorite mover, and sure enough, this VALV valve is trading up 56 cents over $2. It hit my target already today by piercing $2. That's an easy 30% to traders in the intraday stock chat who bought this, and many did and made great money. Some of them saying they just paid for multiple years of the chat room just off of that. So that's how you do it, folks. Bottom line is, the key is to watch the charts and just read the charts. Don't listen to the talking heads on TV. They're going to mess you up because whenever they're overly bearish, and remember, they do this for ratings. And that's the one thing that I never understood, folks, is that the average person just watches them thinking they're really just, telling you exactly the neutral bias to the market. That's not true at all. CNBC, the rumor was in 2000 when the tech bubble burst, they almost went out of business because ratings got so bad. Remember, they have to pay these people to be on TV. They have to get advertising, money. That's the way it is. So if you have it, they have to perpetuate the fear and the greed in the market to get people to watch. Right? If they were totally neutral, many people might not watch because it's not that fun. It's not going to the fear or the greed. So just keep that in mind. I think there's a very firm, important thing of why you must trust the charts, and the charts will tell all. And that's, again, how we are in the money on all our plays. That's how we called the bottom of the market last week, and how we're going to continue to make money for our Research Center subscribers and our chat room subscribers. Come take the 7-day free trial, folks. Easy enough to sign up for on the website. No obligation as long as you cancel before the end of the free trial, which is 7 days, and you're good to go, and you'll be making money. Take care, guys.